Is Bitcoin's current 17% retrace over as we approach the halving, which is just around the corner? We're going to be talking about these reaccumulation ranges in this cycle to better understand if this pre-halving retrace is indeed over. Subscribe to the channel for more videos like this in the future. Let's dive into today's video. Of course, like the video if you enjoy content like this going forward. And let's talk about today's pre-halving retrace, because we've seen a 18% pretty much retrace, replicating the March 2024 pre-halving retrace. So we've essentially seen two retraces within this reaccumulation range. The question is this the bottom of that pre-halving retrace? Well, if we talk about pullbacks within reaccumulation ranges, over the course of this entire cycle, we've seen ranges develop and also fake breakdowns, tricking investors into panic selling and capitulating before price would appreciate towards the upside and resume into a new uptrend. So here we see downside wicks below the base of the reaccumulation range, and some of these wicks are shorter, as you can see in this range, but some of them are much more volatile and longer, as you can see here, or even earlier on in 2023. So the question is, are we seeing something of the same? Because we have seen a drop into 59k. It's not entirely clear that this is exactly where the range low of this reaccumulation range is. However, we're already, should this indeed be the bottom, we're already seeing some sort of downside volatility below this level. 60,600 is that key support that needs to continue holding to avoid for Bitcoin to really continue this retrace from going into a longer pullback period. Because, for instance, this 18% retrace in March, that was only 6 days long. This is now a 10-day retrace almost. So it is a longer one by standards of recent history. But if we look at previous retracements, well, these two retraces, for example, this is where we saw a 60-day and another 60-day retracement, whereas we've seen previous retraces at 2 weeks, 3 weeks, maybe 3 weeks again. So if we do lose 60,600 as that support, we'll know that, first of all, this reaccumulation range low is going to be a little bit lower, but also we're probably going to enter into a multi-week retracement period at the same time. But it's still really important to be watching out for this downside wicking below the base of the reaccumulation range, because if it doesn't happen here, then it'll definitely happen at a lower price level should this not be the bottom of that reaccumulation range, because it isn't clear if this is the bottom. This is why I put a question mark right over here, because we simply don't know that answer just yet. But as we progress throughout the halving, we'll know where that range is, especially if we rebound back into 70k. We'll know that this is the established range, and if we reject from 70k back into 60,600, then we'll know that this is indeed that range. So really important to be watching out for downside wicking below the bottom of that range, because this is also what has happened in 2016, for example. We saw downside wicking below the base, giving us an initial idea where that base is going to be, and then after the halving, we managed to hold here, but still actually downside wicking a bit into a 40% retrace in total. But still, you can see downside wicking in those reaccumulation ranges. You see downside wicking in those reaccumulation ranges throughout the entire cycle, even in the beginning of the cycle, for example. But this also happened around here in March 2020, where downside wicking below the range low of that reaccumulation range also occurred. And even in the next one, after the halving, downside wicking tends to occur. And this isn't even about downside wicks below the range low of the reaccumulation range, because we see upside wicks below the top of that range as well. You can see upside wicks here as well, and some of them are shorter and some of them are considerably longer. And it's just a tale of psychology, because really, as a range develops, we see a psychological story play out. Upside Wicks is where people get really euphoric, want to buy the breakout, get really excited and over optimistic and overconfident and over exuberant about price really starting to appreciate quite considerably. They FOMO buy, and then they get trapped in that downside, or upside wick. It's an upside wick that they get trapped into, and then price pulls back. And probably even the same buyers would be capitulating on this downside wick where maximum fear of a breakdown ensues. People start to panic, get pessimistic, uncertainty and doubt really do start to creep in of a bull market top being in. Whatever the case may be, this is where that fear really starts to be palpable in the market. And this is where people capitulate and panic sell. So we see on both sides of the spectrum that psychology play out in these upside and downside wicks. And so we saw euphoria earlier on, remember, when we breached to new all-time highs, 70k, people thinking we're going to go even higher, and FOMO buyers getting trapped in these upside wicks. Well, we're seeing the inverse of that occur right now. The sentiment is a little bit better since we've seen a recent bounce from the current reaccumulation range low. But just yesterday when we really saw 59k, for example, this is where people were starting to panic a bit and starting to expect even lower 50s. And that's typical price action and typical sentiment and emotion, where we see that psychology simply really people just give into that fear and uncertainty and doubt that comes along whenever price teases a break from support but never actually does that. So that's essentially the psychological story of a range. Not only to just mention those extremes, because the range high is an extreme and the range high psychology and FOMO beyond that level is an extreme emotion. And it's an extreme emotion when we see downside wicking and maximum fear and pessimism whenever we deviate below a support. So these are essentially extreme emotions on both sides of the fence, so to speak, on both sides of the range. But what about the less extreme emotions? What about the boring emotions where price just moves sideways and doesn't really do anything? It's impatience and it's boredom and it is disappointment in thinking that this was going to be a free ride, that we were going to see price appreciation to 100k right away in one single candle. And it's just disappointment in this not really materializing for people that bought in expecting profits. And this is where people start to maybe get a little bit discouraged and get a little bit disenchanted with this asset and maybe start to look into other altcoins or circulate their fiat out of the market entirely. So that's also the psychology that we really need to be looking out for. And unfortunately for people susceptible to that psychology, that's the psychology that simply lays ahead for us in this reaccumulation range, as we're really in this transitional period here from the pre-halving retrace, which is currently in progress, transitioning us into the reaccumulation range, because this is essentially a transitional period where the retrace has to happen to hammer out a base, because we know where the top has been hammered out, but we're experiencing that retracement to hammer out this base before really understanding where this reaccumulation range is going to be. So once we transition fully into that reaccumulation range, those are going to be the emotions, the ones that I talked about. Those are going to be the prevalent emotions where we're just going to consolidate for really several weeks, maybe even multiple months. We're just going to be moving sideways. This has been the case in 2020 and also the case in 2016, where price really just doesn't do much for multiple weeks at a time. However, these periods of boredom and impatience and not really moving the needle, that's going to precede the final parabolic phase in the cycle, the post-halving parabolic upside, where we see new all-time highs and beyond. And that's something to really wait for and be patient for. It would really be a shame if you were to be shaken out during this period. I understand if you get shaken out in fear because you're afraid of generating losses and losing money that you invested that you might need for your lifestyle or your mortgage or other really important familial expenses. I understand that this is an extreme emotion and that shakes you out. You might have to learn that lesson once or twice. I've learned it many times, I can assure you, but it is understandable if an extreme emotion catches you off guard. And what I can't really, or I really wouldn't want for people to have to miss out on this parabolic upside. Because if you miss out on the parabolic upside because of fear, okay, you could understand that. But if you miss out on parabolic upside because of being impatient and a little bit greedy because you wanted more profits during this time and it just went sideways and appreciated 10% in a few months, it is disappointment, but it's something to just go through and it's something to just be patient with, because if you get shaken out here, it's that boredom and it's those disappointing emotions that get you out of the market. So they're not extreme, it's just something you have to be able to manage better. Like you have to manage better also extreme fear and extreme FOMO, but this comes with time. It would be a shame to miss out on this parabolic uptrend in any case, whether it's because of extreme fear and panic selling or FOMO buying and then getting resigned to the market and just dumping your positions at a small loss and being impatient and not holding for that parabolic upside to occur. But it would be a shame to be missing out on the cycle because of boredom and just being impatient. So the parabolic upside, that really does lay ahead, something to be waiting for and being patient for, and using this reaccumulation range rather than being bored, actually building dollar cost averaging positions during this time, because we know that this range is somewhere here, maybe a little bit lower, but it will definitely be worth accumulating during this ranging period, which could last several weeks, maybe even multiple months. Really important to be utilizing this period to your advantage, dollar cost averaging and positioning yourself for the most important part of the cycle where things will simply get crazy. And this is also where you'll be experiencing the most return on investment on your portfolio. It's this phase that comes multiple months after the halving. So it would be a shame to be really selling around the halving right now, because we are around the halving. It would be a shame to sell now because you would miss out on this part of the cycle, and that's something that you simply shouldn't allow yourself to miss out on, because that's what we wait for every 4 years. In any case, that's about it. Subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this content going forward. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.